you know, so in this case, what I wanted was I wanted a vehicle where I could save, and it grows forever. And while it's growing forever, I can still borrow against it uh, from the life insurance company and use it for other opportunistic things that are needed at the same time.
Hey, what's going on, Cashflow Hackers? It's Chris with Life 180, and we are here. I'm doing an interview today with a very special individual, Dr. Drew Benbody. And so Drew is a doctor in Canada, and Drew is really unique. He's got this odd passion for whole life insurance, like I have it, and I thought it would be really fun and beneficial to have him come on here, ultimately just have a conversation with him about his journey with discovering whole life, and just ultimately having the conversation about why he believes this is such a great asset for people to have, especially doctors, and ultimately the principles of the principles. And we're going to get into all this, but Drew, thank you so much for being here, man.
Yeah, thanks a lot. I mean, it's an honor to meet you, and I'm really excited. I'm always excited to meet all the inspirational people in this ecosystem. So thanks for having me on.
Absolutely. So if you don't mind, I would love to hear a little bit about your, I guess, journey to discovery of whole life insurance as an asset, and ultimately how you heard about it, how you started going down the path of discovery. What was the tipping points that made you realize it was amazing? So if you could just kind of share your story a little bit, that would be a phenomenal way to start.
Yeah. So, so as a physician, right, you have this drive for perfectionism. So even in the medical world, you want to read articles, you want to provide, good care to patients. So my daughter was born last year, and I wanted to be a good parent. I wanted to be a good dad. So I wanted to read as many books as I could. So one of the books that came across my desk was Rich Dad, Poor Dad. And it had the word dad in it. So I was like, oh, clearly it must be a parenting book. So long story short, it's disclaimer, it's not a parenting book.
Yeah, if only every parent read that book, though.
I would recommend that every parent give that book to their child in their teenage years. But I couldn't, I read the book overnight. Just like Tom Burns. I read the book overnight, went to work the next day, and I couldn't stop thinking. I couldn't stop thinking about my legacy, what role finances play, why am I working 80 to 100 hours a week? I spent a decade or more trying to understand why I wanted to become a doctor. I wanted to help people. I wanted to change their lives. I wanted to be, in the most vulnerable spots and being able to get them out of that situation, right? So that book opened up on the financial side for me. So since then, I haven't stopped reading. I still continue to read. And so along this journey, I got pitched by a certain financial company saying that you should take an insurance policy on your child. So I was like, okay, that's kind of interesting. Why would you need an insurance policy on a child? But okay, sure. So I got the illustration, and I looked at it, and I thought this is really good. It's growing in cash value and kind of understanding all these concepts. And that brought me to kind of do some research on insurance or life insurance as an asset class. So I would say the first book that I read was Nelson Nash's Becoming Your Own Banker. Like, who doesn't read that, right? And it was
classic.
I must say it was a very, very heavy, dry read. Like, that's putting it lightly.
Totally.
So I read the book twice, but after I read a number of books in between that. So I read Patrick Donohue's Heads I Win, Tails I Lose. And then as you're doing research, I came across The And Asset. And that was like an eye opener. The And Asset was an eye opener. Then The Case for IBC, Bank on Yourself, like the whole meal deal. Confessions of a CPA, because I think that CPA
Brian
is
Bloom.
in the US.
Yep.
Yeah.
I'm having Brian Bloom on the channel here shortly.
Yeah. So I read all those books, and then I came back to Becoming Your Own Banker and read it all again. And I must say the illustration that I was provided, like, just to give you an example, the cash value the cash value to the premium was 1:25 in the first year. So if you're, let's say, putting in, I don't know, $2,500, the cash value was like $100. So like, talk about bad
Yeah.
structuring of the policy,
Yeah.
right? Talk about
Totally.
how bad structuring of the policy.
Yeah.
And so I could totally understand why, 90% of all the financial experts out there will say no to whole life, because yeah, this is the product that is being pitched. And this is a major company. This is a major company in Canada that
Mhm.
has a large assets under management and knows a lot of physicians, if not all of them.
Yeah.
Right. So I was disillusioned, but it didn't stop me. So I directly picked up the phone and I tried to talk to as many people as I could. And Caleb is easily accessible at that time. So I spoke to him. And then you come across Liz Lamond with, at that time, a different organization,
Yeah.
and so on. And so I contacted as many insurance companies as I can across Canada to
Mhm.
find out the IBC concept. And so along the way, I had to essentially do due diligence to find out who is the best insurance agent who could serve me
Mm.
in this journey. So ultimately, I did get a policy, which is like, it's like 1 to 0.9. So basically, I put $1,000 in, I get $900 cash value within the first year, right? So look at this. It's the same product. My child was probably like 60 days old by then. There
Yeah.
wasn't much difference, but look at the structuring of the policy, how different it was. And that's what brought me here.
That's awesome. So what is it about? What is it about this? Because let's face it, you're a doctor, right? So as a doctor, there's all sorts of different groups. You can look up the white coat investor. And I
Yeah.
know you said there's like the equivalent of a white coat investor group up in Canada, very similar.
Yeah.
And they love to hate on life insurance as an asset, right? Like that is what it is. So how is it that, or I guess, what is it about it that brought you to the conclusion that this was actually the right way to go for you, or it's in
Yeah.
general, it's just a good philosophical kind of foundational asset?
Yeah. I can correlate this to my own profession, right?
Mhm.
So, I worked in multiple provinces in Canada. I worked in multiple hospitals within Canada.
Mhm.
And, just like your physician can prescribe you one drug and it treats, let's say, high blood pressure, you can prescribe 10 other drugs that are in that class that
Mm.
also treat high blood pressure, right?
Yeah.
But some drugs are better tailored, which is the purpose of being educated,
Mhm.
to that particular patient's physiology. So that's the reason you pick that drug. But, in the financial world, it's sometimes not like that. So at the end of the day, this is a tool. It's a foundational asset. I do think it's not an investment, but it
Mhm.
allows me to achieve the goals that I set out for my children, right?
Mhm.
So so in this case, what I wanted was, I wanted a vehicle where I could save, and it grows forever. And while it's growing forever, I can still borrow against it from the life insurance company and use it for other opportunistic things that are needed at the same time. Now I don't have to choose. It's not an or, it's and, right? So now I can save for my child's education and also find opportunities if I wanted to, because otherwise, previously, as an early career physician, you're always like, okay, what do I do? Do I save for retirement? Do I save for my child? Do I pay off my mortgage? Do I, buy a Tesla? I mean, if that's part of your goal, right? You're always like juggling, and it's like, there's no end to this insanity. It felt like insanity. I felt frustrated. So it was easier to now make the decision, because now there's an asset that grows. I mean, obviously you still need some skills to be able to pay down that loan so that you still have access to that cash value for whatever purposes it's useful for. But now I can do both, multiple uses of the same dollar. And also it is throughout a child's life. So I can give this asset for her education, right? And she uses it for education. She
Mhm.
gets a job, if that's the path she follows. She pays down the debt. Now she doesn't have to worry about retirement. That same asset, by the time she retires, can be converted to an IRP if that's what she wants. and she has basically retirement funds or income. I hope she doesn't retire. I hope she becomes an entrepreneur or whatever. But if she didn't have to worry about the future, because the future has been kind of taken care of with a certain strategy, now she can focus on adding value to people right now, right? Changing the world right now, whether she wants to clean up the plastic in the oceans or help patients in the hospital, whatever it may be, it doesn't matter. You find out what your value creation, what's your sole purpose, right?
Sure.
What is your intentional living, as everybody talks about.
Yep.
So it grows throughout your entire life. You find me a tool that allows you to do that, because if there is, then I'm happy to use that tool, right? So that's the reason that particular policy was, or a tool was used. Yeah.
That's awesome. So I'm not a doctor. I don't understand what it's like to be a doctor. I am an entrepreneur. And I understand doctors in Canada are a bit different than doctors in the US as far as how you get paid and kind of the overall structure of your businesses and so on and so forth. But the principles are the principles, and I'm an entrepreneur who my whole life I fit what I would call an opportunistic investor profile, right?
Yeah.
And so to me, when I look at this, when I talk to entrepreneurs, I can make the case and have a conversation with an entrepreneur, business owner, or what have you, real estate investor, on why whole life insurance is so important when you design it properly and when you implement it and understand it, to be able to execute and create more opportunity for you in your business and in your financial strategy. So that's all easy, but what I don't know, and because I'm not Canadian and I can't sell, so I've never even thought about this, so I'm curious to hear your perspective on this, is why should doctors, like, how does whole life insurance design in the way that you understand how to design it, how does it solve problems for doctors? Like, what problems does it solve for doctors up in Canada, I guess, is the easiest way to put it.
Yeah. So again, I mean, we don't have to make the disclaimer here. This is not investment advice. This
Right.
is not financial. We're not accountants. We're not lawyers.
You're good.
The bottom line is you have to understand the tool, right?
Yeah.
You have to, the example that I can give is doing an appendix surgery, right? You can do,
Okay.
I'm sure doctors will understand this. You could do a laparoscopic, you could do it through ports, or you could do an open, which is you basically cut the belly and do the surgery, right?
Okay. Sure.
There are two ways of doing that surgery, and I can assure you, I can go across a group of doctors, and some will say open's better, and some will say laparoscopic's better. So that's what you have to understand. Like, you will find people who'll say whole life is better. You'll find people that whole life is not better. You have to find out if this tool makes sense for you,
Mm-hmm.
and if it makes sense for you, then why complicate things? Go with the things that makes sense to you. What you're able to leverage the tool for.
Yeah.
So the pain points for me as a Canadian physician that I saw compared to the US world, I mean, there are a lot of similarities, but there are also some differences. So similarities are, so pre-COVID, Canadian physicians were burnt out 40% of the time. Okay.
Mm-hmm.
So now that definition of burnt out could be changed. The bottom line is that we lost passion for our profession that we spent a decade trying to learn. And it became kind of ritualistic, routine. And I don't know. I mean, I would be naive to say that I don't have elements of burnout, but I still like medicine. I still love serving patients. So that pain point, hasn't gotten away. But I had to find out why. So there's a good book called Indistractable. It talks about why do you feel the way you feel, right? So why did I, and a huge part of that was two things. One was the fear of litigation. So the fear of litigation, that, I essentially, if you worked so hard to earn an income overnight, litigation can, take the ability for you to earn that income away, right? And two is, if you did accumulate net worth rather than cash flow, then they have access to that net worth, right?
Really? So you don't have insurance?
No, we do have insurance. We do have insurance through the CMPA, the Canadian Medical Protection.
Like a malpractice type insurance?
Yeah, malpractice insurance.
Okay.
Yeah. But, in my conversations with lawyers and accountants, the chances are low, but not zero,
Okay.
I mean, that's the whole point of risk mitigation, right? The purpose of
Yeah.
risk mitigation is to reduce the risk. I mean, that's my job as as a family practice anesthetist, right? So
Yeah.
I wanted to reduce the risk, and I also wanted to. I was not a big fan of volatility. This whole idea of I need to save money, put it into an account, forget about it for 30 years, and hope that it will grow to that point,
Mm.
right?
Yep.
So I wanted to go out there and find out tools that are doing things differently. So with regards to the first thing about, if I have a premature demise,
Mm-hmm.
then my family should be taken care of. Well, what allows that? Basically life insurance. Now, yes, you could do buy term and invest the difference, or you could do other products like IUL and whole life, which we won't get into. IUL, which we don't get into right now, but whole life allows you to do that. Okay, so that's the first pain point that could be solved. Okay, the second pain point is it's creditor protected, even in Canada. The
Oh, that's cool. I
cash
didn't know that
value,
about Canada. That's great.
yeah, so the cash value inside the, I mean, again, I'm not a lawyer, but I think it's creditor protected, even if it's inside the policy. And then it's paid tax-free, depending on how you structure it, it's paid tax-free to your family.
Mm-hmm.
And then the third point is the various things that I can leverage it for. So I can borrow against the cash value without getting a credit check,
Mm-hmm.
right? I mean, assuming that you're not doing a bank loan, you're doing it directly from the insurance company,
Yep.
because I want the control of an unstructured loan. I
Mm-hmm.
decide when I want to pay the loan back, right?
Oh.
So no credit checks, being able to access your funds while it grows in the background, and then at a certain age in your life, you could then convert it to an independent retirement plan strategy where it pays you and provides cash flow rather than you paying into the premium. But this requires discipline. It requires discipline, and it has financial consequences, specifically tax consequences, just like the US, if you prematurely cancel the policy, right? Because it has grown inside the policy. It is tax-free growth inside the policy. It's potentially a tax-free distribution to you, depending on how you structure it. But if you cancel the policy, then it's not tax-free at that time, right? So you do need a certain amount of discipline.
Mm-hmm.
And so those are the aspects that I liked. I liked that this was a process. This was a kind of a mindset, and other asset classes didn't teach me that, right? They just said, okay, put money here and something will happen 30 years later, right?
Yeah.
Well, this one gave me a structure and allowed me to pursue that structure. And one of the other things, the last part that I didn't cover that I wanted in my life, was I wanted to donate a certain amount of money in order to change a part of this world, right? And there's two ways you can do that. You can accumulate that wealth and then donate it away.
Yep.
Or what is guaranteed in this world is demise. Being buried into the ground. Yep. That is definitely a guarantee. So I could buy what I will donate in the future through a policy.
Yep.
Now, absolutely, if I buy term and invest the difference, if I have a good career and then I retire and then I pass away, well, that insurance is gone. Well, with the whole life, I know what is the value the day I take the policy, right? And it grows from there. I mean, there's term riders and all that which fall off, but you know when that's going to happen. And so now you can say, okay, that portion of the funds that I wanted to donate, I've already earned it. I've already gained it.
So you just said something. We got to spend a minute here on this topic, right? So you, and I don't know you very well. We've talked a couple times, and we're having this conversation, and it's very, very apparent to me that you just have this this contributor's mindset. Like your driving force behind you is contribution and making the world better, and you have a sense of responsibility that pours out of you. And I sense that, right?
Yeah.
And so the funny thing for me, every time somebody talks to me about buy term and invest the difference, it's like, let's not even have the conversation about which is more financially, mathematically effective. Let's just talk about from the perspective of what are your values? right? How do you value contribution? How do you value legacy? How do you value, this concept of what we're doing for the next generation, right?
Yeah.
And the idea of buy term and invest the difference is ultimately coming from a scarcity mindset perspective of what's the minimum I can do to get to where I want to go, right? And
Yeah.
we could put it on a spreadsheet, and mathematically, whether it lines up or doesn't, I still think it loses, but that's a different video.
Yeah.
When it comes to wanting to achieve a goal, right? And let's just say you made yours very obvious. You have this very, very delineated, clear objective of contribution in whatever way that it is for you, but you know where you want to donate. You probably know what that looks like to you, right? Like you see that.
I have a vision. I have a vision.
You have a vision, right? And that vision may morph a little bit, as we grow, as you evolve, as your circumstances change. But the bottom line is, if you come at it from a scarcity mindset, that vision could blow up if you follow the buy term and invest the difference, because you can outlive your vision, right? Like, because the insurance goes away and now you're not insurable, right? Like, that's why I always kind of tell people is whole life insurance, when you properly design it, is the only financial tool in the world that will guarantee that what you want to happen will happen when you want it to happen, whether you're here to see it or not. Right? And so, but you have to have that abundance mindset. Right? You cannot come at this from this scarcity mindset perspective, because if you do, it's just going to hold you back. I mean, and it's not a matter, like I said, it's not a matter of the dollars and cents, even though I'm a nerd and I love the math and I still think the whole life side wins. Even if it were to lose, I could make a really argument fundamentally why I'm a big believer we get our fulfillment and our self-esteem and our self-worth based on the contribution that we have in the world. Right now, you as doctors, your group of professionals, you guys contribute a lot, right? Like, you help a lot of people, and that's got to be fulfilling in a lot of ways. But it just becomes, I can assume, because it's kind of similar, like, I feel like, to what I do. Like, I feel like I give a lot in my way, but also sometimes it's just like, oh, this is just what I do, and so, like, you just kind of go through the day and you do what you do. And I think it's important to, like, really make sure you're tapping into, like, why you're doing what you're doing, and understanding that. And I'm a big believer that you got to make sure your values are in alignment with your financial strategy. And what I find about buy term and invest the difference is that, typically speaking, that is not in alignment with what most people would consider their values, or be, if they really broke it down, of how they wanted to show up in this world. It's the other side of the coin. It's not in alignment with what they say they want to accomplish.
Yeah, like, I mean, that's the thing, right? At the end of the day, having spent all this time trying to learn, reading these books, talking to people, they're both tools. But the thing that kind of, again, I love numbers too, and I did the numbers, and I did the taxing the seed, taxing the harvest, the whole, defined contribution, all that stuff.
Sure.
And sure, I could be wrong, because there are a lot of variables. There's way too many variables, and it's hard to account for all those variables. But the one thing that I think helped me was, Caleb covers it in his book, as well as Nelson Nash, the 16 characteristics of a financial vehicle or an investment. And and I actually had an Excel sheet where I compared all the asset classes, hedge funds, real estate, and whole life, and all that stuff. And sure, okay, if we look at just the rate of return, then it's going to be difficult for you. But I think Garrett in his book, Killing Sacred Cows, the money tree, talked about it as well. Which one is the closest that will guarantee it? Now, nothing in life is guaranteed, aside from obviously death, but which is the one that allows you to get as closest to that as possible? Like, buy term and invest the difference means that I need to invest that difference, and I need a certain level of, I cannot use the word guarantee, but a certainty that this money has to grow to this amount. And when it grows to that amount, that I give that amount as a donation or a contribution. Right. And from a feelings perspective, because finances are an emotional decision, whether you like it, whether you believe it or not. Finances are an emotional decision. Buy term and invest the difference didn't give me that emotion. I mean, we're harping on buy term and invest the difference and whole life, but whatever tool you're using, if that tool does not give you the emotion of confidence, of reasonable certainty, of risk mitigation, then it's just not a tool that I'm going to use. I'm not going to use that. And so like looking at the whole life or the whole life insurance strategy, it brought me closer to that certainty. And when I got closer to the certainty, I actually became more enthusiastic to be a doctor. I felt happier to be a doctor. Like if you look at any other profession, you have a profession who is helping people and 40 to 50% of our people are burnt out. It doesn't make any sense. We're doing one of the kind of the best services, I suppose, one of the best services, but it doesn't make sense as to why so many of us are burnt out. I mean, finances could be one thing, it could be family dynamics and all those kinds of things. But this idea that I could change this world, whether dead or alive, I could bring some certainty into certain elements, like taking care of my family, protecting my retirement, protecting against medical expenses in the future, like having an emergency fund as a storage of capital inside the whole life. It was such a cathartic experience that I really didn't care what the markets were doing. Like I was asked a question just a couple of weeks ago, what do you think about, the markets or whatever, what is going down, Tesla's going up or whatever, Twitter, Elon Musk bought Twitter. So now, whatever, right? And it was interesting because at the time I was so focused on at making sure that my patient was doing well. I was trying to be, a good physician, that those things, I don't even care anymore. I don't care what the markets or other things are doing. I mean, I do and I don't, but I can remove that aspect. I can just focus on the one thing, right? Gary Keller's one thing. And be good at that, provide value to that, and then move on to the next task. And if there was another tool that provided that, then as someone who is trying to be efficient, well, I will gravitate to that. But I have not found, but I haven't felt like that with any other tool.
That's awesome. Yeah, I mean, I guess I hadn't thought about it in those terms before. It helps you just having that peace of mind in a job. When you have a job that is I'll just use the term a grind, right? Because you're putting in a lot of hours, right? And so whether you're passionate about it or not, when you put that many hours in, it's a grind. And so so that's one component. And so then you have your professional life you have to think about, but then you have your personal life, right? And your finances and thinking about retirement and planning for college for your kids and all these other stresses that go in. And it's like, right? It's like, oh my gosh, like it can freak you out. So to eliminate the stress on one side of that allows you to show up more powerfully in the other area of your life, right?
Yes.
And then it allows you to be focused. And when you're less stressed when you're at work, even if you're there more hours, if it's not stressful, you can come home and now you're able to be more present and better with your family. And like life is just different, right? When you don't have all that stress. And so, I mean, it's interesting because I build businesses and I grind and I do all that stuff too. And like, so I get it. But I kind of grind in this space, right? So it's like I'm always thinking about this stuff. So
like at the end of the day, like I just had a conversation with another physician where we're placing our profession on a pedestal. Okay, fine. It is maybe on a pedestal, but at the end of the day, when I talk to my partners, in the financial world, at the end, these are specialized tasks that need to be provided. It's like they need to be provided because as long as there are humans on this planet, there are certain things that you need. You need healthcare, you need finances and fighting inflation, and you need housing and all this. We are going through an affordable housing crisis right now, right? So that's near and dear to my heart as well, right? So so we're leveraging their knowledge and their passion to be able to do that. And I'm just one piece of that in the healthcare world.
Sure.
It's just that it's a lot more regulated, it's a lot more licensed, and the path is a lot more longer than the other kind of professions. And I've told many people, right? You take someone's finances and destroy them. I can assure you, their quality of life will be much worse than health. Now, health, I could do surgery, I could give you pills, I could try to correct it, but it's a lot more difficult if you completely destroy their financial world, right? So everybody's task is important.
Totally.
Right?
Yeah,
Including your life insurance agent, your disability insurance agent, whoever it may be.
Yep.
Your income does not make you a higher value person in society, which is another kind of mindset paradigm shift, right? Your income is not a value of how much value you're providing to this world.
Totally. Yeah, no. And yeah, absolutely. Couldn't agree more. That's amazing. Yeah. It's funny. There's that old statement. It's like money isn't everything, but it's right up there with oxygen, right?
Yeah.
It's it's important. I mean, because if you mess it up, I mean, the bottom line is we all have at maximum 40-ish years of really good predictable contribution. If that, and so if you get it wrong for one 10-year period in that 40-year gap, that 40-year window, which, by the way, almost everybody does, right?
Yeah.
Because I don't know very many 20-year-olds that between 20 and 30 that get everything dialed in perfectly.
Caleb?
Right? Yeah, Caleb. He might be the only one that I've ever met that got it dialed in, right?
Yeah.
And so, it's like a unicorn, that when you find somebody that does that. But so you get one period of time wrong, and you're fighting uphill, right? You're fighting an uphill battle. And I guess there's an old way of making decisions that I kind of look at. It's what's the upside, what's the downside, can I live with the downside, right? And what I love about whole life insurance is it's totally transparent on what is the downside, and that. And so if you can prepare for the worst, right, then what you need to do to guarantee your results effectively. Right now, like you said, there's not really any guarantees.
Yes.
The world could completely implode. But my argument to that is these life insurance companies have been doing this for 170 years successfully. In the United States, just like, and I know you're in Canada, but like I always think about it like this. These insurance companies have been doing this, paying a dividend every single year, never missing a dividend, even during the Civil War in the United States.
Yeah.
Like before the Civil War, like before Abraham Lincoln was even around, like that kind of stuff. That's mind blowing to me, right? That they did all that through the Great Panic of 1907, the Great Depression, all the wars and the dot-com bubble and the Great Recession, the housing bubble and COVID. They've never missed a dividend payment. And so, like, if a whole life policy lets you down as far as your financial security, I promise you have a lot more things to worry about in life than what's going on with your money. You know what I mean?
In terms of in terms of the tools, there's a reason why the Rockefellers, there's a book called What Would the Rockefellers Do, right? Like there's a reason why, I don't know if it's true or not, like Disney borrowed from their whole life in order to start, Walt Disney borrowed from their whole life to start Disney, right? Like, they had it back then. And I think Joe Biden has a whole life policy as well, as something like that. So, Warren Buffett has something called stranger-owned life insurance, right? Which is a whole another investment strategy where you are buying up whole life insurance policies from others in return for massive liquidity, right? Stranger-owned life insurance, and even big companies do that. There's a reason. At the end of the day, what I've realized is that it doesn't, you can take index funds, you can take public equities, you can take REITs, you can take real estate, you can take crypto, you can take whole life, you can take any of them. And I can ask you, can you name one person who's rich using that particular, or wealthy, because there's a difference between rich and wealthy. Can you name one person who's wealthy using that particular strategy? I can assure you, we can name one person who just uses that single 100% asset allocation, who is wealthy using that strategy. And then I can say, can you name one person who used that strategy and is financially not doing well. We can all name one person. So what is the difference in the tools?
Yeah.
The difference is the person.
Mhm.
That's why Robert Kiyosaki said there's no bad investments. There's kind of a
Yeah.
suboptimal investors. So you
Yeah.
have to know what that tool is capable of, the pros and cons, and whether it works for you. And if
Mhm.
you're and then move forward with that tool. And you also need to align with people who use that tool. So there are
Mhm.
people who use a different tool, like index funds, and then
Yeah.
say that whole life is awful. Well, that's like trying to get advice on, neurosurgery from your plastic surgeon, right? Like it doesn't work like that. Like you wouldn't take that. It's just like, I mean, the common, there's a good pitch for that Dr. Glockenflocken. He's an ophthalmologist in the US,
Okay.
and he makes videos on kind of stereotypes on doctors.
Okay.
And the stereotype is that orthopedic surgeon can't do medicine, can't, or not can't do, but they don't get involved in the medicine. Yeah, because they're so focused on their bones and orthopedics, right? You wouldn't get diabetes advice from them. So that's the same thing. I see what I've noticed in the financial world is I have someone who is giving me index fund advice, whole life advice, but all they do is index funds. You need to get it from someone who's lived, breathed, and kind of finds a passion for whole life, and then find out if that is the type of life or strategy or financial strength that you
Yep.
would like in your life, and then align with that person. So if index funds gives you that, okay, go for it.
Yeah.
If crypto gives you that, go for it. It's this whole idea that, okay, if you do crypto, because we're all going to DeFi out of our banking system,
Yeah.
that's kind of my issue. That's my issue, is this holding on to this speculative idea.
Well, and that's where I got to give you a lot of credit, man, because there's not a lot of people that are able to disseminate that, right, and come to their own conclusions. And I think it's just because professionally, it's easy for you as a doctor, or just using you as an example, it would be really easy for you to talk to a salesperson, talk to an index, people who sell indexed investments, or who sell mutual funds, or who sell stocks, or who do manage money, or anything of that nature, to just listen to them and say, hey, what about this whole life insurance thing? And they'd be, oh, no, that's no good. Or talk to a whole life person, they'd be like, what about this money management thing? Like, and they'd be like, no, that's
yeah,
they're gonna rip you off, like whatever. And listen, I have my own opinions, right, about all that, but my opinions are formed, and I do what I do because of my beliefs, and because of my life, and because of my experiences, and because of my skill sets. And the one thing that, even though I'm very, very opinionated on this channel, right, and I have very hard lines on why I believe what I believe, I also believe that my opinion and my beliefs aren't the right things for everybody, right?
Yeah.
Like how I feel is absolutely true for the person who meets the same profile as I have, right? Like, and so from that perspective, like you and I obviously share a lot of beliefs, right? We
abundance mindset.
Yeah, totally, right? And so it's really fascinating. And so to me, the combination of all that, and then I'm a big fan. Do you know who Brendon Burchard is?
Doesn't ring a bell.
So he's a strategic business coach. He's phenomenal. You should look him up.
Dan Sullivan is who I know.
Dan Sullivan, yeah, he's great. But Brendon Burchard, he has this statement. He says common sense is very seldomly common practice, right?
Yeah.
And it's interesting, if we just go through finances and think about it sensically, and stop being sold, and we take accountability for the results in our life.
Yes.
And we just take a step back and we say, okay, what do I have to do in my life to take massive accountability for the results that I'm going after? And then you look at it from that lens, and you figure out, okay, if this is on me, and I know that it's hard for people to go from that level, or to go there, because it's like, well, I'm a doctor, I work 80 hours a week, 100 hours a week. Like, how can I take this on? Right? Like
like I'm no expert. I still have qualms with my wife about the amount of time that I need to spend with my daughter, so that our family as a whole. I totally understand that. Like, I spent my nights, reading up on self-development and personal development. Like what I like, there's a good book called Family Fortunes, and there was a line in there that said, you know, because the idea is that we're not experts, right? So money managers are experts. We need to give them the money, right? So that's the idea. But in the book Family Fortunes, it said there are certain things that either need a family to be on board, or you need to have that skill. And the reason, the example that I can give is, I can give two examples. Is, you know, let's say with regards to your health, we say, you know, good exercise, you know, a balanced diet. You don't consult your doctor to say, can you do my exercise for me? And then pass on the benefits of your exercise to me, right?
Right.
So that's
really
that.
good.
I mean, the Family Fortunes, I think, gave me that idea, paradigm shift, that there are certain things that need to be done by families or relationships, like close people that you can trust. And one of them is wealth. Is you need somebody within the family who understands wealth, the reason for pursuing wealth, and you need to take control of it. Because just like exercise, you can't give your money to someone else. They build your money, and then you get the benefits of them building your money. It's not, I mean, it could work like that, but it's not that easy, because there are certain things that need to be within your realm. Like, it's like saying, you know, can you please balance my checkbook? Well, no, that's a task that has to be well within your realm, right? There are certain tasks that need to be done, like cooking, taking care of your kids, that need to be done as individuals. Now, you could get a nanny, you could give the, take the child away, but then it's a different kind of pros and cons. So that's how I look at wealth. Is I'm not against many money managers or anything like that. It's just that I need to be aware of the risk. I need to understand the product well, and I need to, whether it's up or down, right? Let's say the market, let's say the banking system or whatever is in debt and it's not functioning. Well, there's a lot of other problems that's going to be around that time. Whole life is the least of your problems. So that's how I think about this, is that it has to be within your realm of knowledge. That's first part. The second part is that, if this was important to you, you would make time. I understand you, like, I'm working 80 to 100 hours a week as well, studying, trying to provide good care to my patients. But I find this is an upfront work. Like, if I put in the upfront, let's say a year or two, you're doing focus and you're like, I want to master this. I'm going to set it up. And once I'm going to set it up, this is the philosophy that we're going to follow. And Whole Life allows you to do that. It allows you to build a philosophy. And once you build that philosophy, it's easier to add things on top of it. Right. So I created time because this was a priority to me and my family. And if it means, spending a little bit less time outside of work, then it's a little bit less time outside of work, because that's just the way life works. If this was an important priority, you got to make time for it. Or if you don't have time, then put in the time to build the relationships with people you trust, including money managers, and then kind of align with them with regards to their task in kind of this journey, like a syndication, right? What is their role? What's my role? If I'm bringing the capital and you're building it, then what is our understanding here in terms of that? But blindly just giving things away, that's kind of when I have an issue.
I agree. It's interesting because I mean, we all have a life that we want to create for ourselves, right? And I think if you were to go poll 100% of the people in North America, let's just say the US and Canada combined, right? And we were to poll every single person, and the question wasn't, hey, what's your profession, or how much money do you make, or anything like that, but instead the question was, are you living the life that you want to live? Are you living a life that you're proud of? Are you living a life that you have joy in? Are you, like, most people are going to say no. Right? And what I know to be true is that money is a big part of that, right? Like, more significant for some people than others. But even with our relationships, I mean, if you go through divorces, right? Like you talk about divorces and estranged relationships and stuff, money is like the top thing as far as irreconcilable differences. It's named as a reason why when people get divorced, at least in America, right? And
Yeah.
so it's obviously important, right? It bleeds into our relationships. And so I'm a big believer that if we are not intentional about our money, we are living the life that we're living because of our relationship with money. That's what I believe. And it's, if you're not intentional about improving or how you handle that, or really understanding that relationship, like, which is, gets a bit woo-woo-y sounding, right? Like, but if you're not intentional about doing that, then you're never going to be able to grab hold and control the results that you want in your life, because you can make a lot of money. And I've met a lot of people that make a lot of money that are really successful and they're still miserable. Tony Robbins talks about it all the time. The most successful people in the world that are calling him being like, I'm worth $1 billion and I hate my life, right? Like, so money isn't everything, right? It's about how we show up in the world, and how do you use money as a tool to create the life that you love. But it takes how you implement and how you leverage that tool to create a result that you want. And at the end of the day, I just know if you're not really intentional and active and understanding, and you stop partitioning out, like, okay, I make 200 grand a year and I have 20 grand going towards savings and this amount going here and this amount going there, and like siloing it all out and just being like, okay, I'm going to have this person take care of that, this person take care of that, this person take care of that. It doesn't work that way, right? Like, you have to have your hands around macro. Everything. You got to be in control of the macro in your own life. And listen, it's a struggle, right? I mean, it's a struggle. The struggle is real.
Yeah, like it doesn't
deals with it.
In my journey, like, I mean, it doesn't really matter. Like, that's the difference between the rich and the wealthy, right? You could be making $10,000 a year. You could be making $10 million a year. I mean, there's, NFL players, like 40% are like broke after like a year or two after their contract ends or something, right? It doesn't matter how much money you make if you don't have the financial literacy on how now, money does not buy happiness. Money itself does not buy happiness. But there's tons of books out there, even philosophical books, on what is happiness, right? The pursuit of happiness, what is happiness? And if you look at most of the elements, it's like meaning, it's family, it's relationships, it's gratitude, it's optimism, right? And I don't remember in the elements that make up happiness, net worth, money, income being on there, right? But money is a tool or a commodity that allows you to buy the individual elements that make up that happiness, right? So with regards to optimism, okay, if I lose my job, I'm optimistic I could get another job in a year because I have an emergency fund, right? If I want to invest into a real estate deal, it is creating a relationship with someone to invest in their deal. If you want meaning in your life, you're going to go buy that Tesla because you don't want to contribute to the fossil fuel world and you feel that you want to buy an electric car. So money allows you to buy the individual elements that make up happiness, but you need to be clear on what are those elements that make up your happiness. So we're not saying you need to be perfect on what that meaning is. That could evolve over time, right? Even to this day, I don't feel like buying a Tesla. I think if you buy a $10,000 Honda, it's still cheaper than buying a $50,000 Tesla with the batteries and all that stuff. But at the end of the day, you need to know what are the elements that make up happiness, and then and what amount of money allows you to achieve those elements, and then the tools that allow you to earn money to then achieve those elements, right? And that's just the way the world works. If we lived in a barter world, I'm down. Right? I'm down. I'm happy to go to work. If I can get a guarantee that when I come home, there's 3 meals a day, my child could go to education, and we don't have to, worry about I wouldn't say welfare, but like, food on the table or shelter over my head. I mean, I'm not talking about socialism or anything here.
Yeah,
I'm not
yeah,
saying
no,
that.
I get it though.
But if someone can give me that guarantee, well, then I wouldn't place as much priority on money.
Yeah, but
But
nobody can give you that
unfortunately, that
guarantee.
guarantee doesn't exist, at least in
Right.
North America or the capitalistic world.
Yeah.
So money then is the next thing that allows you to achieve that.
Yep.
So
Yeah, 100%. And I say, you know, whatever results you have in life, that's me, that's you, that's everybody. Like I feel like nobody's ever, I feel like, unless you're like a Buddhist monk or something like that, nobody's ever just totally content and happy with where we are. It's all this journey, right? We're always like, I'm a big believer that growth is a big part of life, right? And we always got to be kind of growing and working towards something, whatever that looks like, you know, and it's different for everybody. But what I love about utilizing whole life insurance as an asset and having that as a foundation of your financial life is it kind of forces you to take a more proactive approach in your contribution to your own life, right? Like it builds a system. And honestly, like, we are where we are because of our behaviors, because of our actions, because of the way we think, because of our strategies and how we execute day in, day out, right? And so when you look at that, it's like a lot of people just kind of say, oh, I want to get better results in my life, so I'm going to change money managers. That person is not going to fix your life. Like the only person who's going to fix it is you. And by the way, whole life insurance isn't going to fix your life either. It's just a tool, right? So it's important to understand that, like, it as a tool is not going to fix your life. However, how that tool can help you show up differently in your life and force you to play a different role in your own life. It's like your example with the trainer, or like going out and having somebody work out for you. You're not going to get that result. This is going to force you to hit the gym with your money, right? This is going to force you to like play that role, and there's empowerment behind that, right? Like once the bail is raised and you start seeing, oh my gosh, I don't have to work 40 years. I can actually get where I want to go in 10 years, 15 years. Like, and I can have control over the results. And, you know, maybe I'm not ready yet, but doing this system, I can grow into becoming who I need to be to get there. Like, honestly, man, that is why I love doing this so much.
Yeah, it gives you options, right? Yeah. And that's what I mean when I remember talking to Liz about this as well. Mm-hmm. And I mean, it's the arrival fallacy, right? When I get here, I'll be happier.
Yeah, yeah.
Right? When I have a net worth of $1 million, when I have a net worth of 10 million, I will be happier, is the arrival fallacy, which it's like, that's just how our minds are designed. But you have to say, I'm happy now. I like the journey, not the destination.
Yeah.
But I was telling Liz this, let's say we're having this YouTube show now, and let's say things didn't work out the way we planned.
Yeah.
Okay. Well, it's not that we're letting go of the status quo. We're still doing some elements of the status quo, saving, some registered accounts, you know, some things like that. We're doing those elements, and we're close to the status quo. So at the very least, if we tried something different, we were not successful, the status quo, at least for me, is pretty good. Mm-hmm. Right? If I'm not successful in what I want to achieve, at least I tried. Mm-hmm. And if I'm successful, it gives me options to continue the status quo or try something different. Yeah. Or if I wasn't successful, well, I was already on the status quo path. So I'm just going to continue the status quo path. Sure. Right. So, I mean, and that's the thing. I mean, I don't know if it's unique to high income earners or not, but like, I do believe that it's a privilege to be a physician or a high income earner, and being able to create that level of capability where you could try something different. If it doesn't work out, then you could just follow the status quo path. And that's why it's an and asset, right? You could do and this, it's not or. But at least what my goal is, that I can answer this question 30, 40 years from now, because my parents never invested in the stock market. I mean, they're all GICs. Okay. Which is in the US world, it'll be tips. In fact, it's worse than tips.
Oh, wow.
Right. So I'm coming from a family who's all their concept of money is me earning that money or putting it into a tips account.
Wow.
Okay, or GICs, guaranteed investment certificates, is what we call them in Canada. It's like worse than bonds because it's like a savings account. It's like a savings
Wow.
interest rate, right? So I'm coming from that world, and I wanted to answer the question 30, 40 years from now to my family. Well, you know what? I tried everything. Okay. I tried working hard. I tried crypto.
Yeah,
I tried
totally.
whole life. I tried index funds. Like I'm not doing like, millions into each. Like, you could do it with $10,000 or whatever.
Yeah.
And I can assure you, after trying all of this particular strategy not only helped my finances, but also helped my life.
Mm.
Right. I want to
Perfect.
answer that question once and for all, because the middle class, like this is the reason why we do what we do. The middle class always has this question, right? Oh, I did this for 30 years and it didn't work out. Well, now I can't turn back 30 years, and neither can I create time, which is the greatest asset in being able to grow your wealth, right? Whereas in my case, as a high income earner, I'm able to do it in those, multiple asset classes. And I want to answer it for my family. Well, oh yeah, Drew 100 years ago tried all of this, just like the Rockefellers, right?
Yeah.
We
Yeah.
tried all of this, and clearly, real estate and whole life or whatever, angel investing or whatever, worked out. And we could continue that path. And if you want to try something different, okay, well, try something different. You would now have a baseline, because you created
Yeah.
multi-generational wealth. You
Yeah.
have a baseline to now work on.
Uh,
With inflation, with purchasing power of
oh.
chips is like close to zero. So,
Oh. Horrible.
you're
Yeah.
starting from zero or
Yep.
negative.
Yeah, it's a nightmare. So I always, and we're gonna have to wrap this up in a second, but
Yeah.
it's interesting because when we look at the financial institution, have you ever read this book? I just had it here, The Pirates of Manhattan by Barry Dyke.
No, I haven't read that one.
You should read this. It's a tome, and it is.
Oh wow.
This,
Okay.
this guy, he's a financial researching savant.
Okay.
Like it's an amazing book. I've interviewed him on this channel a couple times. He's amazing. He was on the Jay Leno show, talking when the recession happened, the .com or the housing burst in the United States.
In 2008.
In 2008, he went on the Jay Leno show. He's written a couple of these. He wrote. I think this is actually his second one. The first one was this is the Pirates of Manhattan, The Road to Serfdom. But the fascinating part is he shows in here, and he's got all the proof showing that banks, where we are all kind of trained to keep our money, banks don't even keep their money inside of banks. They keep it inside of BOLI, bank-owned life insurance, right? Yeah. And so, and it's all fun to hear that, but he gives statistics and he shows actually like the public ledgers of these companies, and it's a fascinating thing. So anybody that wants to see it, go get this book. And I know you're into this stuff, so you should go get it.
And, again, just to kind of wrap it up then, okay, it is confirmation bias, right? Because we're looking for the knowledge, the information that it is supporting our mindset.
Yeah.
But having said that, I must say that like I would say most of us do give leeway to the other side. We do give leeway to the other side of the coin. It's just not heard. I can tell you that. It's just not heard that we are listening to the other side of the coin, and we still don't think it's better. And there's all this information out there. But what I want to wrap with is, at the end of the day, you're going to hear so many things. This is the reason why I was saying that there's so much noise in the world. It's crazy. In fact, with the internet now, it's worse now than it was before, because at least before you had your close, trusted group of people. Mm-hmm. I would say, from the book, The Power Connector, the top 5, the 50 people, and then I think it's the 100 people. That's, I think, the main focus should be on. It should be on relationships, should be on trying to connect with people and learning from them and learning from their mistakes, learning from their successes. Yeah. You don't have to reinvent the wheel. You could just follow the path that has already been done over the last 1,000 years, maybe 500 years, let's say 500 years, in terms of this wealth building, strategy and the struggles that they have had. And that's what brings me peace. That's what brings me peace in this journey of finances. And the other thing is, I wanted to say, I didn't like, once you kind of get onto this knowledge, you don't want to talk to anybody, right? Okay, I found something secret. I want to keep this to myself. I like it.
Yeah.
But I think that from the book Go Giver,
Mm-hmm.
we do have to give. We do have to
Totally.
contribute. We do have to try to give people tools to achieve their goals, and in return, we will be remunerated in material wealth if that is part of your goal or vision, right? That's
Yep.
even what Garrett talks about. Is it's counterproductive. Help other people, and that you will be returned in terms of material wealth, human wealth. And I think that's what drives me to do these sessions.
I love that.
Yeah.
Well, I gotta say, this is a lot of fun for me. Hopefully it was for you too. And I know there's a lot of value here. So anybody that has any questions or comments, the one thing I will encourage everybody to do is comment in the comment section below. I'm obsessed with responding and engaging with people as far as comments go. I always tell people the best way to get a hold of me isn't to send me a text message, it's to comment on my YouTube videos, because I'm more responsive to that than I'm a text message. But so comment in the comment section below. Would love to engage with you. If you have any questions at all, go ahead and do that. If you have any questions about how this could look in your life, I'm going to put a link in the description below. You can go through and set up a call with one of our team. Whether you're in Canada or the US, we have people that can help you in each place. Drew, I just want to like bow down. Good for you, man. You've done an amazing job. You're just such an impressive person, and it has nothing to do with the whole life stuff and like just your perspective on life, how you go through your decision-making process, and how you're just trying to show up in the world. Like, it's I just want to let you know how impressed I am with you, and I know that the world is going to get a lot of value out of this video. So I hope everybody shares this video and likes this video, and I'd love this to get out there to people, because there's a lot of people that need it, and I'm a big believer we're coming into some challenging times, with the economy. And that's inevitable. Now, I'm not a doomsdayer. I'm not saying it's
exactly.
We're going to get through it. It's just going to be a down cycle. But it's in those down cycles that we need to make sure our minds and our hearts and everything are in the right place and in alignment. And I'm telling you, if you get this money thing right, it makes the rest of it a lot easier. So
yeah, and I want to say, it's thanks for having me on. It's a privilege. It's an honor to meet you. And it's interesting. You're telling me that it's been it's been nice to have a chat. I find you guys inspirational, like Caleb, Garrett, Kim Butler, Nelson Nash, Chris, Liz. I find you guys inspirational for me, as opposed to the other way around, because we all have this path we're going to follow. In terms of our families, in terms of our finances, things are going to work out. Okay. At the end of the day, must be my optimism, but things are going to work out.
I'm the same way.
But the greatest capital in this world is the people we meet, right? Yep. Like, it's not the buildings, it's not this tour. Like, you go to Europe and you look at Champs-Élysées or whatever. It's the people, because, just like the World War I veterans and the World War II veterans, the stories die with them. Mm-hmm. Right. And it's hard to bring those memories and stories back. So for me, I think that's what I realized in this journey is we're trying to accumulate all this stuff, but experiences, memories, connections with people, that's the greatest capital, because that really is a finite resource that disappears. That really, really disappears.
Love that. That is so true. Well, Drew, thanks again. And everybody, thanks for being here. And if you haven't already, please subscribe, hit the bell, that way you get notified. All sorts of awesome content coming out. And until next video, have a blessed, inspirational day. We'll talk to you.
Take care.
See you guys.
Bye.